Welcome back. Well, let's talk about Rossari Biotech reported a steady set of quarter 2 numbers. Overall revenue rose 3% while operating margins came in flat at 13.2%. However, the textile specialty chemical segment is under pressure with revenue decline of 13% on a YOY basis. The company says export growth will outpace domestic growth going forward. To discuss more on this, we are joined by Sunil Chari, the managing director of the company. Mr. Chari, good morning. Thank you so much for joining in. I wanted to understand what's happening in the export markets. You talk about the fact that exports will outpace growth in versus domestic markets. How much exports are as a percentage of total revenues? They grew 32% in first half. What is the growth expectation in FY25? And are these freight cost issues causing any problems with exports right now?
Exports has been a focus area for growth, and especially in our HPPC segment. We feel exports will continue to grow, and our focus is on the US, the larger Americas, including North America and South America, and the Europe market. The focus segments besides home personal care is also agro and pharma and food processing. We see a very good demand and very good potential for growth in the coming quarters.
Say good growth, it was 32% in first half. Will you be able to replicate that in second half as well?
Our guidance has been 10% growth over last year. We do not know the geopolitical situation, so we would hold on to that guidance at this moment.
I thought the revenue guidance, sir, was 12 to 13%. So this 10% guidance is?
Yeah, the 12 to 13% is something which we would like to hold on to, yes.
Okay. But since exports is growing much faster, does it mean the domestic business is a bit subdued, and you're also facing some capacity constraints which you're addressing?
We have capacity constraints also, but we also have a constraint from ethylene oxide, which is our key raw material. We buy this from Reliance, and Reliance was to expand in April 2025, and they have delayed it, and that is one reason. But we still expect our non-ethylene oxide products, which are in R&D pipeline, to grow in the coming quarters.
Okay. So, you were talking about 12 to 13% growth that you'll see in exports, but domestic with ethylene oxide, there are some issues that you're facing. The other business that has been under pressure is the textiles chemicals business. That has continued to be under pressure. What went wrong this time? Is a bigger export contribution coming in from here? And what is the outlook? Will it continue to be under pressure in the second half as well?
Yeah, Bangladesh, is a good market for us, but the geopolitical situation in Bangladesh, there was a change in government, and things were a little slow, but I think they are falling back in line. India textile has also been subdued. But we hope the home personal care and performance chemicals and even animal health and nutrition should more than cover up for the slow growth in textile chemicals.
So in this home personal and performance chemicals, HPPC, which you call 60 to 70% of your overall revenues, you've said, the growth in exports has been higher also because you enjoy higher realizations and margins versus the domestic market. So can you tell us how much higher are the export margins versus domestic? And in the domestic market, are you seeing pricing pressure?
The FMCG, companies have been slower in the last quarter. As you all know, you cover all those companies. We see, I think, this Diwali season, we have good orders now. All our sites are doing well. The exports margin are generally 2 to 3% higher in gross margins than the domestic market. Even though our gross margins were higher, we had higher freight cost, and we continue to add a number of people in sales, especially services, and also R&D. These are two focus areas for us to grow. The new expansion, which is coming up also, needs a lot of people, which we are already taking now. This is something which we feel is investing for the future, and the future seems to be very bright.
So this domestic, in the domestic business, what was the volume growth in H1? And again, is there pricing pressure because FMCG sales have been slow?
Yeah, so this is something which is very heartening, is the volumes have been in the range of 10% growth. And if you see our last 6 quarters, every quarter we are growing. At 498 crores, we are the highest ever quarterly sales. Our institutional chemicals business is doing very well. The Rossari Professional, which we call, which is a 100% subsidiary, we are growing by leaps and bounds. In the PAT and EBITDA, we are also, doing very well. And I think we have the highest EBITDA ever in our history. In terms of also, we are at Rossari, we are at this moment sitting on about 40 crores of cash, growing at such a good speed, investing, and still being like a zero debt company is something which we are proud of.
Okay. All right, Mr. Chari, thank you so much for joining in today and giving us all those details. So that's the word coming in from Rossari Biotech. Steady set, and they expect growth to continue going forward between 12 to 13%. Time for a short break. Management of City Union Bank joins us next to discuss their Q2 numbers and the way forward.